Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Catherine Virga, who is the Director of Research at CPM Group here in New York. Catherine, thanks very much for coming back on.
Thank you very much for inviting me.
Now, I know you were recently at a conference, a metals-related conference up in Toronto. Could you talk a little bit about that? What was the tone of the conference, things, the outlook for the industry, basically?
Sure. I just got back yesterday from the PDAC, which is the Prospector and Developer Association of Canada. It's a big conference. In top years, we've had 35,000 delegates.
Wow.
And this year, it's down to 23,000 delegates.
Still a lot.
Still a lot, but you can see there's a dramatic shift in the enrollment. And that has to do with the number of companies attending and the number of companies that have the cash to be at that conference. We've seen a lot of the more distressed companies weeded out in 2013, and now in 2014 the tone was actually relatively positive, because you have companies that are sitting there, they have good assets, they're just waiting for the right time for commodity prices to pick up to find the cash to move these projects forward. There was a little bit more optimism for the precious metals companies, because many of them were smaller in size and they're more digestible for the private equity funds and the commodity funds looking to provide cash for them. The base metal companies are still suffering because they have multi-billion-dollar projects, and that is a big bite size, and it's still very difficult to get those projects up and running when base metal prices are just starting to come up from their bottoms.
Okay, so, and it's interesting because I guess the attendance, decline is almost sort of like a contrarian indicator, right? I mean, we had a washout, right? So I guess you could take that as a positive development for the market. Let's talk a little bit about that base metals, and base metals prices starting to come back up in the context of still, I guess, relative weakness globally, economic weakness. Is that a signal? I mean, do you think we could look at that as some sort of a leading indicator for economic activity in general? Or is it just, sort of a counter trend sort of rally, and we see prices head back down again and stay low until we get some definitive increase in economic activity?
Oh, no, that's some good insight. Well, we did in 2013, in the last quarter, second half, start to see some improvement in macroeconomics, and it was rather regionally diverse. We saw strength in Europe, in U.S., Japan. China was the only one that was a bit of a question mark. We saw that China looked like it was continuing to slow down, and in the first 2 months of 2014, it really has continued to slow down. There's quite big concerns there, but I would say there's been a little hiccup maybe in January and February for Europe and Japan, but things I think are still on track. So we're still going to see more improvement in the rest of the world economies, and we're not going to be relying so much just on China.
So are we talking about now, we're talking about what, aluminum, tin, lead, those sort of base metals, where we're seeing better conditions, at least improved conditions from what we've seen over the last several years?
The ones that are performing the best right now are the lead, zinc, nickel, and tin markets. Copper's hanging in there. Aluminum's still suffering a little bit. The big differences here is the lead and zinc markets have now moved into a deficit in 2013. Very last data out of the year showed it was in a deficit. And those markets aren't looking like they're going to see a surplus for the next 2 to 3 years at least. So there's growing deficits in those markets, which is obviously positive for prices. And there's just not a lot of supply that is there to fill this growing gap. Like I said, the investments into the zinc space have been, poured partly because of, one, there's not a lot of zinc projects out there, good high-quality zinc projects. And second, its prices peaked in 2006. It wasn't like copper, which had strength into 2011. We've seen, this weakness, and that has discouraged investments. And this is a 10-year cycle for the zinc market. The peak then, and now we're starting to pick up. We have inventories to work through. So that's going to take some time to have a physically tight market. But you've seen the auto numbers.
Right.
Lead is performing well. We have good growth out of Japan, U.S., China still, and that's been all positive. And nobody really wants a lead mine in their backyard or a lead smelter. So that's keeping supplies tight.
Not anyone that I know, anyway. But let's talk a little. You've given us a perspective on sort of the economic fundamentals there. What about from the investor side? I mean, what did you pick up there? Is there, was there a washout there too? I mean, did interest on the part of investors, funds, that sort of thing, did that pull back, or is it still there?
There's actually quite a bit of interest from investors. Particularly, a lot of private equity firms have raised quite a bit of funds in the past couple of years, saying that we are going to find these distressed assets, you're going to get 20-30% returns. These are good times to be in the markets. Well, they haven't made those investments, and now they're all itching to find that golden investment, and they want good returns on it. So that's difficult because these companies that know that they have strong projects might not want to be giving up, such large portions and taking haircuts. But no, private equity groups are out there. They have a lot of money to put forward, but they haven't invested it yet. So that's one positive trend.
Maybe they missed the bottom. I mean, it looks like they a little bit missed the bottom because we saw that really in late 2013. And I mean, gold prices have come back up. But from what you're saying, it sounds like the rally can continue because you're first starting to get this big investor interest coming back into the market now, right?
Yeah, and I would say that there's more strength available, particularly for maybe equity prices who have not had the same types of recoveries. Obviously, they've definitely bounced up from the bottom too, but we're talking about going investments, directly into the equity space to help fund these projects that are going to fuel the next wave of demand.
Now, you were there last week, so, it hadn't really happened yet, but when we look at the Ukraine situation, that's a big unknown. Like, we don't know how that's going to play out. It certainly has the potential to inject a lot of volatility into the markets one way or another. I mean, on the one hand, you could say, hey, you could see people going into gold as a safe haven. On the other hand, if it happens to affect markets in a negative way and economies, you could see a pullback in some of these more economically sensitive metals, right?
Yes, it's definitely uncertain. Tensions doesn't seem to be escalating at the moment, but that's from yesterday's announcement. So there's still a lot of uncertainty of where it's going to go in the next couple of weeks. It's that type of that is much more of a wild card, and it's hard to really price out. One thing that we're looking right now in bigger trends for investment demand is maybe changes in China related to their investments. There's been tremendous amount of investment going into the property sector, residential and then also investment properties. And we're now seeing a decline in the second tier and third tier and fourth tier housing prices in China. And so we're looking at this maybe as a opportunity for investors in China to rethink their investments. If they're not going to seek the same returns with the downturn in pricings, where else would they might go? They might go into the precious metals markets. That's something that we are incorporating into this month's precious metal advisory that we're publishing today. Our outlook for how much investment demand might end up into the gold market potentially.
So you're saying that outflows from property markets, which had been a draw for investment portfolio flows, now moving into maybe gold, for example. Potentially.
And that has implications for base metals as well, because not only are base metals consumed in the construction of these properties, but also in the appliances that are actually put into the houses afterwards. In China, the zinc market has the most amount of demand going to construction. That's like 25% of its demand goes into construction, much more infrastructure. For copper, it's pretty high. It's about 10% of Chinese demand goes into the construction space. So those types of declines in construction, we've already seen that completions of completions in China for construction have declined. They're at lows not seen since 2009, so quite dramatic numbers.
Right.
And that is going to be weaker for the base metal market particularly, but maybe better for precious.
All right, a lot of cross currents, but basically looking pretty bullish. And I like that conference attendance contrarian indicator. That's a good one. Catherine, thank you very much.
Thanks for having me on the show.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.